Welcome back. It's time for Under the Lens. Sonal has hopped across to the wall to tell us more about Neogen Chemicals. Sonal.
Thank you so much for that. Well, Neogen Chemicals, it is under the lens today. The stock, remember, surged over 10% yesterday, but that bounce comes after a tough stretch. It's still down 8.5% over the last 1 month, and in this year itself, it is down around 29%. Now to the business. The company is a key supplier of agrochem and pharma intermediates with strong capabilities in bromination, chlorination and other chemistries as well. But the earnings picture this quarter was mixed. Revenues, yes, they grew 8% on a YOY basis to 209 crore rupees, but the EBITDA fell 13% to around 30 crore rupees, and the profits, they fell even more. They were down 69% to just 3.4 crore rupees. And if you zoom out and talk about the bigger picture, the trend is telling. Revenue has inched up steadily. 686 crore rupees is what we saw in FY23. It reached FY25 levels of 778 crore rupees. It was around 691 crore in the previous year as well. And in the first half, around 395 crore rupees. In terms of EBITDA, that number should also come up for you. It has reached levels of 136 crore rupees in FY25 and now at 61.5 crore rupees. Profitability, however, hasn't kept pace so much. Profits at 13.7 crore rupees in the first half, which compares with 35 crores in FY25, and it was as high as 50 crore rupees in FY23. Now, the key talking point has been the battery chemicals business. The street was very bullish on it, but it is now an overhang because the management now says they won't hit the earlier target of 300 crore rupees revenues in FY26. The reason? Delayed electrolyte orders, largely because Ola's gigafactory ramp-up has been pushed out. And the ramp-up now shifts to Q4 of FY26 with meaningful volumes only from second half of FY27. But there is a silver lining to this because the company expects a very strong demand cycle kicking in from FY27, and that is what maybe the street liked as well. With battery chemical revenues projected at 400 to 500 crore rupees in FY27. On the base business, which is X of the battery business, they expect FY26 revenues at 850 crore rupees. Their capex remains quite heavy. 620 crore is already done in this year, and another 500 crore is planned by the year end as well. In terms of that, the capex will be done, but the peak gross debt is expected to hit 1800 crore rupees in FY28, and they will see a lot of growth in FY28 because of their battery chemicals business as well. Let's talk about the balance sheet metrics now. Working capital days have improved slightly from 129 to 123. Return on capital employed, however, stands at that modest 9% mark for FY25, and they do have a lot of capex and expansion coming up as well. On the ownership front, promoters hold 51.23% stake, which is reduced over years. Mutual funds at 22.76%, and FPIs also hold around 5.15% stake. But the valuations remain very steep. The stock trades at 133 times FY26 earnings. Maybe when the battery chemicals growth kicks in, this valuation could go down, but that is something that the street is closely watching out for.
It's no longer a surprise, right? Stocks trading at 100 plus PE. Sonal, thank you for putting Neogen Chemicals under the lens. By the way, the recovery continues from the lows of the day for the index. Now just 30 points lower is where the Nifty stands, heading back towards that 26,000 mark. And the mid-cap index too has recovered significantly from the lows of the day, and good recovery seen on the index. The Dow futures, though, that was the one that started this sell-off from the intraday highs in the morning. They are too still 150 lower, but significantly off the lows of the day. Just pull up Aether Energy before we call time on the show. That stock has seen a bit of a spike in the last few minutes, 4.5% higher on Aether Energy as well. Take a leave on this edition of Trading Hour from Sonal, me and the team. Thank you for watching. Halftime report on the other side.